Good afternoon, ladies and gentlemen. Welcome to the 27th of October weekly market review. If I'm not wrong, today is the last weekly market review for the month of October. And ending the month of October, there's actually good news in the market. Latest that we are here is that President Trump is going to meet President Xi this Thursday, and likely we are going to expect a trade deal. And unpacking all this information with us today is, of course, Mr. Gerald Wong. How are you, Gerald?
Hi, Sunny. As I was sharing with you earlier, had a very busy weekend at the CPF event. At the same time, we have quite a number of developments in the market. We have the start of the earnings season and also quite a number of developments across the macro and geopolitical front. So that is keeping markets fairly volatile. So we have seen quite a lot of movements for the US stocks, Singapore stocks, even for precious metals such as gold and silver.
Indeed, a lot of developments are happening everywhere in the stock market around the world. On Singapore side, let's not forget we are also in the midst of earnings seasons. A lot of REITs, business trusts are reporting their earnings. I believe you are going to go through some of their results with us today.
That's right, yes. So as we start, just wanted to go through a disclaimer that today's sharing is not customized to your individual investment objectives and risk appetite, and hence should not be taken to be financial advice. Okay, if you find our weekly market review helpful, do leave us a review on Google by scanning this QR code. If you'd like to join SIAS as a member, you can also scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. Okay, so in the past week, we saw US stocks hitting record highs. The S&P 500 exceeded 6,800 points at one point in time on Friday. But overall, we are still seeing fairly strong gains across all three key indices. And that is really driven by the easing of the trade tensions. In Singapore, we also saw the STI recovering 4,400 points, not back to the all-time high, but effectively having a fairly significant bounce in the past week as well. So the key news that came out was really the US inflation data. Even with the US government shutdowns, this is one of the key economic indicators that were released. And what we see here is that inflation was at 3% in the month of September. This is slightly below the consensus expectation of 3.1%. So overall, no surprises on the inflation side, and that would actually keep the US Federal Reserve on track to keeping the interest rate cut potentially in the next meeting. Okay, so this is what we see for the expectations of the US Federal Reserve. Effectively, we see that in the upcoming meeting this week, investors are expecting that we may see a cut in the interest rates by 0.25% or 25 basis points. Okay, and what we also see is that investors are also expecting that we may see a further rate cut in December. So that is effectively helping to push the markets to new all-time highs. Okay, so in Singapore, I shared earlier that we saw a bounce. This was led mainly by the cyclical stocks. Yangzijiang Shipbuilding up by 9.1%, Seatrium up by 5.8%. Okay, we also see a number of the property developers doing fairly well. City Development up by 5.7%, UL up by 5%, at the back of the increase in primary sales transactions that I shared in more detail in last week's weekly market review. Okay, in terms of the worst performers, actually every stock in the STI saw gains in the past week. So even the worst performers also saw gains. But what we see here is that some of the REITs like CICT, FCT, FLCT lagged the broader market. Okay, the two names that I wanted to share more about today, both of them provided operational update in the past week. So I start with Mapletree Pan Asia Commercial Trust. It is one of the REITs that's recovered fairly strongly since June this year, following the increased expectations of the interest rate cuts. Okay, so what we see here is that for Mapletree Pan Asia Commercial Trust, the distribution per unit for the second quarter fiscal year 2526, which is the quarter ending September 2025, was at 2.01 cents, representing a 1.5% increase compared to the previous year. What we see here is that while the net property income came down slightly by 2.2%, but because the finance expense came down by 16.4%, so that actually helped to lift the amount available for distribution to unit holders. So what we see here is that with the fall in the interest rates, it is helping the REITs as reflected by the very significant decline in the finance expenses for Mapletree Pan Asia Commercial Trust. Okay, so in terms of the operational performance, we see here that in terms of the net property income, I mentioned earlier that there was a slight decline. The strength continued to be in the Singapore assets for both VivoCity as well as MBC. So that actually contributed about 56% of the net property income. However, this was offset by weakness in some of the overseas properties, especially in Japan as well as in China. Okay, so overall, we see this slight decline in the net property income of Mapletree Pan Asia Commercial Trust. In terms of some of the other key operating statistics here, we see that for the portfolio, occupancy was at 88.9%, slight overall rental reversions of negative 0.1%. And we see here in terms of the two key retail assets, VivoCity still saw positive shopper traffic as well as tenant sales. And in Hong Kong, we are starting to see Festival Walk having positive tenant sales and shopper traffic once again. Okay, so if I was to dive deeper to look at the occupancy rate, I mentioned earlier that 88.9% across the entire portfolio. And what we see here is that VivoCity continues to do very well with 100% occupancy rate as of 30th September 2025. But this was dragged down by lower occupancy rate in some of its overseas properties, including in Japan as well as in China. Okay, likewise, this is what we see for the rental reversions. VivoCity had positive rental reversions of 14.1%. But because we saw negative rental reversions at Festival Walk as well as its China properties, so that brought the overall rental reversions to negative 0.1%. Okay, in terms of what it is doing for capital management, it has completed the divestment of two Japan office buildings to unrelated parties. So given the weakness that we see for some of the Japanese assets, this should be taken positively by investors, given that they are actually then increasing their exposure towards Singapore and reducing the Japanese exposure. So for Mapletree Pan Asia Commercial Trust, following the divestment of the two Japanese assets, we see that Singapore will remain even more significant part of the entire portfolio. As a percentage of the entire portfolio AUM, Singapore assets will constitute 57%. And if we're to look at the portfolio net property income, then what we see here is that the Singapore assets will constitute 61% of the portfolio net property income. Okay, what we also see here is that in terms of the balance sheet, currently it has an aggregate leverage ratio of 37.6%. And effectively, we see here the declining weighted average cost of debt from 3.56% to 3.23% as at 30th September 2025. So the lower interest rates is helping to bring down the weighted average cost of debt. Okay, in terms of the valuation of Mapletree Pan Asia Commercial Trust now, price to book of 0.84 times. And then if I were to look at the dividend yield at about 5.4%, which is in line with the historical average. Okay, next I'll share a bit about Keppel DC REIT, which also announced a operational update in the past week. So Keppel DC REIT share price at about 240, which is close to the 52-week high as well. Okay, so in terms of the reporting by Keppel DC REIT, we see here that the distributable income grew by 55.5% in 9 months 2025. That was mainly driven by some of the acquisitions of data center assets that they completed over the past year. Distribution per unit grew by 8.8% in the 9 months of 2025 to 7.67 cents. Overall, in terms of the sum of the key operating statistics, portfolio occupancy of about 96%, and aggregate leverage at below 30% at 29.8%. Okay, so in terms of what we see here for Keppel DC REIT, I mentioned earlier that the net property income grew strongly because of the acquisitions. We also see a decline in the finance cost by about 6.4%. So that helped to boost the distributable income and likewise the distribution per unit. Okay, I mentioned earlier that it has a low aggregate leverage ratio of 29.8%. So that is actually lower from where it was as of June 2025. We also see the average cost of debt coming down due to the lower interest rate environment. Okay, so at this point in time, price to book ratio about 1.5 times, dividend yield of about 4.2%, which is below the historical average. So for this week, we have more REITs reporting, including CICT, Mapletree Logistics Trust, Mapletree Industrial Trust, Keppel, as well as Wilmar. We will all be reporting their earnings this week. I mentioned earlier that we have the US Fed meeting that's coming up. So that will be closely watched by investors, given the very high expectations of the rate cut. So with that, I'll hand over to Sunny, who will share the technical analysis with us.
Okay, thanks, Gerald, for that updates on some of the REITs earnings that happened last week, as well as giving us a summary of what to look out for this week. So, as you can see from the calendar that Gerald shared earlier, this week seems to be there's a lot of high stake kind of a data coming out, or high stake kind of negotiation or results that we are expecting. So of course this morning we hear that the Donald Trump and President Xi meeting that will happen later at the end of this week is confirmed. So they are likely going to meet in South Korea, and then we are expecting a trade deal. So there is sort of a de-escalation of the trade tension, and we are looking for some kind of a renegotiation on some of the tariffs that were sort of a push out earlier that can be brought down. So effectively, I think Treasury Secretary Scott Bessent actually said that the 100% tariff on China is slightly off the table for now. So you can see most of the major indices in the Asian markets has been pretty positive. So on the STI, this Monday morning, we rose about 0.4%. We are now at 4440. So the target would still be the previous high of 4,474 points. And of course, the next psychological resistance level coinciding with the upper bound of that Bollinger Band is 4,500. So my opinion is, let's say if we got a positive deal coming out this Thursday or Friday between the Trump and Xi negotiation, we should see STI sort of testing or touching the 4,500 level. Okay, so key levels to watch, that is the most important resistance level that we are looking at. Support level, we are still looking at the 50 days moving average now at 4326, with the low bound of the Bollinger Band at 4284 as the key support levels. Looking at the STI now, even though we had a very positive week last week, up by more than 2%, the MACD is just showing a slight positive reading. that means that we could be in the early stage of the next leg up in the STI index. You can see that this Monday morning with the 0.4% or 17 points jump, we managed to see a sort of like a crossover of the MACD line above the signal line. That is the indication that we are talking about a new uptrend may be forming. Coinciding with this positive signal from the MACD indicator, we also see the RSI indicator inching up above into the 60-point territory, now reading at 63. So that means that the uptrend momentum is very healthy, and that is likely going to persist in the next few weeks. We've also breached the 14 days moving average on the RSI chart, on the RSI indicator. That also means that momentum is strengthening, okay, for the past 2 weeks or so. So all signs points to STI trending higher, and investors looking at getting to the STI or even some of the big bank names. You can see DBS is up by almost 1% today. The other banks are catching up, with UOB up almost 0.5%, and with UOB up 0.26% and OCBC up almost 0.5% at 0.48%. REITs index also doing well, up 0.5% today. So I think it's a broad market rally. All aspects of the markets are going up, the banks, the REITs. So you should be in a very good place right now if you're invested in the Singapore markets. Next, let's move on to the US markets. So most of the US markets also rose by 2% or more, with the exception of S&P 500, which is up 1.9%. Let's talk about the Dow Jones Index first. So the major news that came out of the US last week, of course, was the inflation data. That has a lot of investors' attention on it, because as we know that the US government shutdown is still ongoing. There are certain key data like your job numbers which are not available. So any data that come out will have a lot of attention on it. So the inflation data came out, which is what is mostly in line with analyst expectation, or even slightly lower. That gives or paves the way, or give the Fed the all clear, sort of to cut another 25 basis point this week in the Fed meeting. So that is the key important thing that we are looking out for, and that is the key piece of information last week that pushed the Dow up by more than 2%. So the high on the Dow Jones Index now is 47,326 points. That is already testing the upper bound or above the upper bound of the Bollinger Band, now standing at 47,184 points. So I think a lot of things are being priced in right now into the Dow Jones Index, especially with the positive big bank earnings. So investors do need to look out for any signs of reversal on the Dow Jones Index. But so far, I have not observed any. MACD is positive right now and looks to be expanding that positive momentum in the next week at least, but I'm monitoring that closely. And the RSI is still healthy at 63 points level, so that means that we could have in the next 1 or 2 weeks a positive leg to push it up higher, but I'm looking for some clear signs of sort of a resistance for a reversal to happen, and that is why we are keeping a very close watch on the US market. So next, let's move to the broad index, the S&P 500. I think the S&P 500 rise last week, right? Part of it, of course, we cannot deny, is also due to the so far positive earning seasons that we have been getting. I think on average, I read some of the reports, more than 70% of the S&P 500 companies that have reported their earnings came in above analyst expectation. So in terms of corporate America, in terms of corporate earnings by big firms in America, it is still very positive, thereby suggesting that the economic conditions in US is still pretty strong, even though some of the job numbers might be weakening, but corporate America is still strengthening. Hence, it is still a positive sign going towards the end of the year at least. Okay, next year we do not know, but going into the end of the year, this earning season seems to be very positive. So S&P 500 ended at 6,791 points last Friday, up 0.8% on Friday, up 1.9% for the whole of the week. The resistance level is now at the 6,807 point level. That was the all-time high that we saw on Friday. We don't have anything above that to sort of guide us, but then that 7,000 handle is what a lot of analysts are pushing out to say that that is the 7,000 handle that we want to clear by the end of the year. Upper bound of the Bollinger Band is also at 6,800, so we are hitting resistance level. Hence, investors do need to take note or look out for signs for any reversal as usual when such scenario happen, or when we test the upper bound of that Bollinger Band. But indicator-wise, we have a slight positive reading last Friday, a crossover. That means that it's an indication of a new uptrend. So not to worry too much that a reversal will come immediately, but definitely we need to keep a lookout for that. The RSI is sort of adding more strength to what the MACD indicator is saying at 62-point readings, telling us that uptrend momentum is positive and likely to grow further momentum going forward. So I think 6,009, 7,000 in the next 1 or 2 months is what is the target that most analysts or traders are looking at for the S&P 500 index. Lastly, let's move to the Nasdaq Composite Index. I think this is the most volatile index among the three US indices. Key factors that pushed up the index was, of course, group corporate earnings, and of course, not forgetting what Gerald shared earlier that this week we are expecting more of the Magnificent Seven stocks announcing their results. So that means that there could be more catalysts to push up Nasdaq. And to me, I see this as investors or traders buying into a positive sort of earnings results that's going to be released this week. Some of the key names, you get your Microsoft, Meta, Facebook. You also have your AA, Amazon, and Apple reporting. So this would be a lot of a high impact news that could affect the index this week. So Nasdaq Composite Index, we ended at 23,204 points, up 1.15% on Friday, up more than 2% for the whole week. Upper bound of the Bollinger Band now at 23,219 points. So we are already testing that level. So Bollinger Band suggesting us that we should look out for sign of reversal because according to two standard deviation, the 90% probability that the stock price will trade within the upper bound and the lower bound of the Bollinger Band. On the MACD indicator, again, we have a slight positive reading. So that means that this could be a sign of new uptrend, and that is also supported by the 61 point reading on the RSI, saying that the momentum is likely to continue. So I think to sum up all the US indices and even the Singapore index, we are all looking very positive on the technical side. We are either looking at a positive new uptrend forming on the MACD indicator with the support of the RSI showing some strength. So that means that investors should stay invested in the short term and do look out for any pullbacks, which could be buying opportunities that you can get back on the bandwagon. Okay, so that's all that I have to share today. Any more key details that Gerald would like to add?
Yes, so I think we are seeing a lot of movements in the market, but this week is a crucial week because of the Fed meeting. We have the meeting between Trump and Xi, and also the start of the earnings season in Singapore. So I think that is going to keep our eyes very occupied, looking at all the developments as well as the results.
Yes, I think that's also keeping all of us very excited that we are supposed to see a very good ending for this year in terms of what the financial market is performing. So we will still continue to update you on all these key developments that's happening this week, and we hope to see you next week in the next weekly market review. So at the meantime, do trade safe and stay safe, and we'll see you again next week, next Monday on the next weekly market review. Bye.